Okay, I guess we are live and we kick off the interim report for Q3 for 4C Group. So, welcome all. I'm Magnus Bergqvist. I'm the CEO of the group.
Yes, Anders Nordgren, Group CFO, will be presenting the Q3 figures. And like in previous webinars, we will end with a Q&A session. So please feel free to add or submit your questions in the chat, and we will pick them up when we move into that section.
Thank you, Anders. Okay, I'd like to start by giving some highlights of Q3. So as we closed the third quarter of 2023, we experienced a quarter far from our expectations, which led us to issue a profit warning on October 10th. This is very unfortunate, and it's the result of us not being able to convert, in this case, 12 significant contracts that we were expecting. It has been very frustrating to have this experience in so many of our contracts negotiations in the same quarter, which leads to an unwanted quarterly volatility. This has especially impacted our North America and Nordic segments. I will later on come back with more details and more in-depth explanations about the reason of these delays. But the main message, however, is that all of these customer engagements are very positive. No contracts are canceled, and we expect to convert them in coming quarters. Our net sales reached 49.1 million Swedish kronor, generating a negative EBIT of 34.2, which is clearly far from expectations. Anders will cover more financial details later in the webinar. On the positive note, we are experiencing a strong pipeline growth in all regions. And noticeable is the growth in our new geographies, for example, Asia Pacific. Worth highlighting in Q3, despite the overall performance, was a continued strong result in our international segments with, for example, key new contracts within the UK Ministry of Defence. Since our IPO, we have invested according to plan to set a foundation for future growth. We have expanded our sales force. We have invested in brand awareness, especially outside of Nordics and UK. And we're seeing effects of this in an increasing pipeline. Another key investment area has been our R&D organization to enable us to accelerate the transformation of our software to a more modular-based scalable architecture and to increase the launch of new products. We have mentioned this before in the spaces like individual training and climate resilience. And going forward, our focus is to optimize and secure return of these investments. And we do not anticipate large new investments and increases in our cost base. Our overall expectations and belief is that we will come back strong. We have initiated several actions to secure this. We have announced new leadership in North America. We've hired a new president with a strong background and a vast network. And we're also expanding our North America board during Q4. We've added several strong sales leaders with a proven track record. We've done that in Sweden, Finland, UK, Australia, and in North America. And as a company, there is an increased focus on conversion of our pipeline. In group management, there is a clear focus and attention to ensure the conversion of all these delayed contracts. As several of these are more complex in nature, we're optimizing our plans to shorten the process and to achieve a successful conversion. But before handing over to Anders, I want to give you some more details on these contracts. The largest challenge and deviation to our expectations has been low revenue in North America. We were expecting major call-offs of licenses and extensions during Q2 and Q3. Currently, we as a company are operational in several programs, both with the US Army and US Marines. These programs are led by large prime contractors And the reason for the delayed call-offs is outside of 4C control and is difficult for us to impact. All of the programs are ongoing, but due to US defense budget delays and ongoing negotiations, only interim contracts have been awarded in the third quarter. And that is the reason also for the very low revenue. The outlook in these programs is, however, positive, but the timing is still uncertain. Looking into 2024, we are optimistic as 4C is now involved in multiple new bids to support our growth in the region. Another important milestone is for us to obtain facility clearance status from the US government. We are in the final stages of this process, and this will enable us as a company to bid and deliver classified contracts directly with the US government without going through prime contractors. Moving over to Nordics. In Nordics, the challenges have been more unexpected. We have previously announced long-term commitments from our defense customers in the region. And currently, there is a positive outlook as increased funding is available. But there has, in most countries, been major delays in the customer's ability to finalize these call-offs. The reason we are given for these delays is the lack of resources in combination with an increased attention on the NATO process and the Ukraine conflict. Our expectations and feedback from our customers is that this situation will be resolved shortly. So, finally, the corporate and public part of the business. As announced and said in our Q2 communication, this has not evolved as expected. The uncertainties in the overall business climate is clearly impacting this, and there is an increased, I would say, carefulness in committing to new software investments. However, as we are seeing an increased number of potential contracts, we expect a larger proportion of corporate and public top line in the coming quarters. We're also very confident in our offering, and the feedback we are getting from our customer base as they upgrade to our new solution is very positive. As a proof of that, it has also resulted that we have no churn in public and corporate during Q3. So I'll come back later, and by that I hand over to you, Anders.
Thank you, Magnus. So if we take a more detailed look at the financial performance during the third quarter, you can see that we delivered 49 million in net sales, a negative growth compared to the same period last year, where we delivered 81 million. When the revenue is broken down by revenue stream, you can see that it is within software revenue, or software revenue is the prime reason to the weaker performance during the third quarter. The other two revenue streams, expert services and software-related services, are either on the same level or slightly above last year's quarter. Important to note is that Q3 is the weakest service quarter due to vacation period. On a rolling 12, we see a negative trend at the moment, a development we aim to turn around to a positive trend coming quarters when delayed deals are converted. Taking a closer look at our segments to the left, we can see negative development in both Nordics and North America, while International continues to deliver strong numbers. International delivered 25 million in the third quarter and is showing significant growth, both for the quarter isolated, but also on a rolling 12-month basis. And this is not only driven by the geographical expansion, but also within already established markets. Nordics delivering 17 million, a weaker quarter where we had higher expectations, especially linked to the clients or programs that Magnus just referred to. North America delivered 8, which also was below expectations, and the revenues in Q3 are more or less bridge contracts that has been established until a permanent rollout is contracted. Moving over to the right side or right part of the slide, and the customer vertical, it is within the defense vertical the majority or the largest delayed deals are found. Looking at profitability, the effect from the lack of software sales in the third quarter had significant impact on our EBIT and profitability. On a rolling 12, we also are on negative numbers, something we expect to turn around as we convert the delayed software deals in the coming quarters. When we are on this slide, I just want to take the opportunity to comment on the cost development. Magnus touched upon it already, but this is an area we are evaluating and monitoring closely. But during the third quarter, most of the investments announced in connection with the IPO have been completed. Investments that have been largely allocated to geographic expansion, sales resources, sales activities, and improving our offering. We have now come to a point where the focus will be on return of investment and to ensure we see full effect on these investments. This at the same time as we optimize our support functions. Therefore, I don't expect to see that our cost base will increase significantly moving forward. Also would like to take the opportunity to comment on cash and cash development. The cash flow is weaker both in Q3 isolated, but also for the first 9 months. The decline in cash relates mainly to a combination of the delayed contracts, investments in the organization, and repayment of tax debt. And important to notice or highlight is that we in many procurements agree to fixed payment plans. And this is mainly due to customer budgets where the investments are spread over a longer time period. And this is more common within the defense vertical. But we have guaranteed contracts and the military customers are always paying according to established and agreed plan. We're of course monitoring it. Our assessment is that the delayed contracts will be signed and converted to cash, something that will improve the cash flow going forward. So summarizing and taking a look at some KPIs, we see that the financial position remains solid, even though the weaker performance during Q3. Net debt remains negative. Net working capital had a positive development during the third quarter, coming down from higher levels in previous quarter. And annual recurring revenue continues to increase based on new contracts signed during the third quarter. So that, I believe, concludes my part.
Thank you, Anders. Before going, and I see that there are questions coming in, but before going to Q&A, so to summarize Q3, it's clear that Q3 has been disappointing and far below expectations. We have experienced delays in several large new and existing customer projects, but none of these contracts that were forecasted in Q3 have been cancelled or lost, and we expect to convert them in coming quarters. We have, as said, concluded most of the growth investments, and I see there's some questions coming into this, outlined in our IPO, and are now working hard to optimize and realize a strong return on these investments. We have taken the actions to strengthen our sales team and leadership, as mentioned, with an increased group management attention of being more short-term in converting the delayed contracts. And thank you for listening, and we will move over to
Questions.
Q&A.
Yeah, so as expected, I see a couple of questions coming in. So let's start. Can you give more details on what full year revenue loss you anticipate from all delayed contracts?
I cannot give a specific full year outlook. I can, however, say that most of the contracts, like always, is a mix of software licenses, development, and implementation services. The license part is not impacted if signed this year because it's the same value. The services and the development services will though be lower based on the timing of when we sign these contracts, as they are recognized based on rate of completion.
Yeah. Okay, next question. You mentioned 12 delayed contracts. Can you give more details of the size of these contracts?
I cannot go into the individual contracts, but I can say that the 12 contracts that I referred to, have an individual order value. So we need to separate order value between 5 million Swedish kronor up to the largest one being 70 million Swedish kronor. In total, it's worth order value-wise 200 million. The full year revenue impact depends on as I said before, on the composition of these contracts. The estimated full year revenue impact when signing these contracts is approximately 70 million kronor.
Yeah.
I can take another question here. Is there any difference in the ability to get paid in the US between 4C and the prime contract? That's a good question. No, there's no difference. There's normally a month delay. We invoice the prime contractor who gets paid by the US government and then subsequently pay us. So we have no experience of any risks in getting paid in the US.
Yeah. Can we expect this high quarterly volatility in the future?
Also a very good question. We communicated during the IPO that we have a large variation between quarters, and 4C should always be evaluated, especially in a rolling 12-month. If you go back to Q4, I think 21, we experienced a similar effect. If I remember correct, approximately 40% of the full year revenue in 21 was allocated to Q4 due to delayed deals. In 2022, we have been able more to balance this over the 4 quarters. Q3, as we are closing now, has been extreme. That's not at all according to our expectations. We were faced with so many extensions and renewals in the same quarter and experienced the delays that I referred to previously. Of course, as a company, we will do everything to avoid that type of volatility. Also, as our top line grows more than cost in the coming years, this will have less effect on short-term profitability. That's a very long question.
Yeah,
Let me see here. I think that is covered. Have you seen any change in behavior from customers, positive or negative, so far in Q4? I'll stop there. No, we have not seen a big change now in Q4. As we said, we expect to convert the contract. Do you see a risk that these delays will end up as cancellations? There's always a concern. But in these cases that I'm referring to, I am very confident in our ability to convert most of these contracts. And the reason for my confidence is verbal and written confirmation from our customers of their intent to end up in contracts with us. You highlighted that most of the investments announced in the IPO are now completed. What is outstanding and what are the associated costs? Well, yes, as I said, most of the investments, the large investments we have done, are in place. But there are clearly, we have a growing business in Asia Pacific. We hope to announce new contracts down there soon. And of course, we need to invest in delivery personnel to be able to manage a growing business in new geographies. But when it comes to group overall cost, when it comes to investments in new software development and R&D, we do not see that we need to expand in those areas. So,
Can take this one. You will continue your effort in sales and marketing for the resilience platform. Are there any major events taking place in Q4 to be aware of from a cost perspective?
I would say no. We have increased the number of activities we participate, so we are participating in events every month. But we don't see an increase in Q4 versus where we have been for the first 9 months.
I think we have some certificates as well. We can take this one. How concerned are you of the low annual recurring revenue in relationship to your cost base? I can take that one.
Yeah.
First of all, annual recurring revenue is our measure of contracted and automatically renew contracts, an important KPI for us. But 4C's net sales comprises of, besides annual recurring revenue, new license sales, development services, implementation, and expert services. And we always monitor our backlog and pipeline and do thorough assessments on a 6 to 12 month basis. And we believe that this provides us with sufficient visibility to be able to balance investments and top line growth.
Take this question, and thanks for all the good questions. Is there any inequality, difference in priority between 4C and the prime contractors when it comes to getting financing on work in progress or upfront payments? 3 different areas. It depends on the contract. It's always better in a lot of cases to prime yourself because you control your situation in relationship to the customers. When it comes to our US Army contract, we were able to, of course, commit to licenses on a regular basis. But the question is valid because it gives you less flexibility in getting the contract in the right order with the prime contractors. When it comes to scope or work in progress, that is usually set at the start of the project and confirmed through a letter of intent together with the prime. Next question.
Yeah.
How is the work going on implementing AI into your software programs for increased efficiency and staying ahead of competition? Very good question. We have, over the last couple of years, first of all, especially in the defense segment, been working on trials together with some of our customers of how both AI and machine learning can enable the training audience on the defense side to get more insights into the vast data. And we are working in several trials. We're also, as we speak, implementing external AI engines into our software to see how, for example, different scenarios can be automatically generated. So the answer is we are actually doing more and more in this field, but also evaluating how we bring that to market.
Can you take this one? Is the appointment of a new president in North America the result of the poor results?
No, it is correct that we are experiencing low revenue in North America as communicated, but the retirement of our US president has been planned for a while. However, we're very pleased with the recruitment that we have announced of Guy Jones, who adds valuable network and experience from his long tenure in the US Army. Michael Koss, our previous president, will remain in an advisory role, which is also very important for our continuity, as he has had that role since 2016.
Right.
Yes. And there are some questions on of shares, and I think we will handle those in separate meetings.
I think so.
I think that's it of all the questions if I look in the log, and I get a thumbs up here from our team. So by that, we close this session. We look forward to the individual meetings later on today and tomorrow. And just a summary, we expect that we will come back strong and convert these contracts that we have been referring to in this webinar. So thanks for your attention. Thank you.